Welcome to The Leap with Japa, the podcast that bridges continents and connects stories. Join us as we dive into the vibrant world of international education, explore diverse cultures, and share the extraordinary journeys of students far from home. Whether you're dreaming of studying abroad or already embarking on this adventure through other means, Leap with Japa is your companion in navigating the exciting, challenging, and transformative world of global education. Let's leap into today's episode. Welcome to today's episode of Leap with Japa, the podcast that is helping international professionals navigate life and work in the US. The episode today focuses on financial planning for international workers. So, you're a recent international student who just started work. Financial planning is a very crucial aspect of your journey. I'm hoping to cover budgeting basics, understanding US banking, building credit, saving strategies, tax obligations, the ins and outs on 401ks, pension plans. Whether you're new to manage your finance in the US or looking to optimize your financial health, this episode is packed with practical advice to help you succeed. So let's dive in. First one is the budgeting basics. One of the things with being in the US is effective budgeting is the foundation for financial stability. Especially for international workers adjusting to a new financial system. So I'll go through a bunch of things. So first of all, you have to create a budget. You need to understand your income sources, including your salary, your bonuses, and every other income stream. You need to know what your expenses are, so you need to break them down into categories such as rent, groceries, utilities, transportation, and discretionary spending. You should also track your spending. You can use apps, budgeting apps like Mint, or just a simple spreadsheet would help to track your daily expenditures. This would help you stay aware of where your money is going and identify areas for adjustment. Next, you need to prioritize your needs. Focus on the essentials first. You need housing, you need food, you need transportation and utilities. Allocate funds for these necessities before considering discretionary spending like dining out or entertainment and things like that. Another thing you should do is you should set financial goals. So you need to define short-term and long-term financial goals. Short-term goals might include saving for an emergency fund, which is one thing I would hugely recommend. Always have emergency funds for 3 to 6 months. That would cover your rent, your feeding, your logistics, and your utilities. Another financial goal might be a long-term goal. Maybe you're saving for your home or for retirement. Having clear goals can guide your budgeting decisions and keep you motivated. And lastly, in terms of this budget, you need to regularly review and adjust your budget. Life circumstances change, and your budget should be flexible enough to accommodate those changes. If you get a raise, for example, you might consider increasing your savings or paying down your debt faster. Also remember that budgeting is a continuous process. It might take a few months to get it right, but consistency is key. By managing your budget effectively, you will set a solid foundation for your financial future. So let's jump into the second one, which is understanding the US banking. Now, this is not a comprehensive overview of the US banking system. It's just to get you to understand the various kind of accounts there are. And essentially, what you have is that there are different kinds of accounts. So you open an account, they usually offer checking accounts and saving accounts for storing money. Saving accounts for storing money, checking accounts is for daily transactions. Choose a bank that fits your needs and offers reasonable fees. You usually would need your passport, your visa, proof of address, and possibly your social security number. or by team number, as the case may be. Be aware that banks have fees and charges, so there might be fees associated with your account, including monthly maintenance fees, ATM fees, overdraft charges. You can look for accounts with low or no fees. Also, look for banks that have online banking so you can monitor your accounts, you can pay your bills, and you can transfer money out to other accounts. You should be aware of two things. You have debit cards, you have credit cards. Debit cards are directly linked to your checking account, while credit cards allow you to borrow money up to a certain limit. You use credit cards responsibly to build your credit score, and I'll discuss this in another segment in this or future episodes so that you'll be able to understand how you build your credit score. Also, you need to be aware of the different ways you can do this, choosing the right bank. You can choose a local bank or a national bank. Local banks and credit unions often provide personalized services and lower fees, while national banks offer widespread ATM networks and extensive online services. This episode is not going to mention a particular bank. I'm just going to mention the categories. Those are the two. Make sure you have one that does international transfer. If you need to send money abroad, check the bank's policies and fees on international transfers. Some banks offer better rates and lower fees for these transactions. There are also international transfer applications that I personally use. So you can check out the multitude of those applications outside or online. Again, this is not financial advice. I'm not going to mention a particular one over the other, just for you to be aware. Protecting your account. Make sure you have two-factor authentication set up, and make sure you have alerts set up for unusual activity. You need to be able to you need to be very vigilant about fraudulent activities, if any, on your account. You need to also understand that you should never, and I repeat, never give out your bank account details to anyone. People can use your bank account to commit frauds without you knowing, and that can get you in trouble with Secret Service, who are the people that are usually tasked with going after fraudulent activities. So be aware of that. Also, FDIC insurance ensures that your bank is insured, which also means that your deposit are protected up to $250,000 per deposit per bank. And by understanding and utilizing U.S. banking system effectively, you can manage your money more efficiently and securely. So let's talk about building credit. One of the hallmarks of the U.S. economy and your growth in the U.S. financial system is the importance of building and maintaining a good credit score in the U.S. A strong credit score can significantly impact your financial opportunities, from securing loans to renting an apartment. So what is a credit score? One of the things you need to understand is a credit score. So a credit score is a numerical representation of your credit worthiness, which ranges from 300 to 850. The higher your score, the better. So you need to understand that. What are the factors affecting the score? Your payment history, your credit utilization, the length of your credit history, and the types of credit and the types of credit accounts that you have, and recent credit inquiries. All these factors affect your score. So one of the first things you need to understand is that you need to use credit cards responsibly. So what you usually typically do is start with a secured credit card. If you're new to credit, a secured credit card means that you send money to the financial institution. Say you have a checking account with a particular bank, you can request for a secure credit card. They take money out of your account and they give you a credit card equal to the limit of that cash, and then you use that to build your credit. Make sure you pay on time your bills on or before the due date. Late payments can significantly damage your credit score. Make sure you keep your balances low. Aim to use less than 30% of your credit limit. So if they give you $1,000, try to keep your usage of that card to $300. High utilization can negatively impact your score. You should also make sure that you monitor your credit. You have credit bureaus that offer services for monitoring. So you have 3 major bureaus: Equifax, Experian, and TransUnion. Regularly check your credit reports from these 3 for errors and discrepancies. You're entitled to 1 free report per year from each bureau. If you go to annualcreditreport.com, you can find that out. And you can also use credit monitoring services that alert you when significant changes happen in your credit report. Some things you should avoid the following pitfalls. Don't open too many accounts at once. Multiple credit inquiries within a short period can lower your score. And avoid closing other accounts. Length of credit history is a key factor in your credit score, so keep old accounts open if possible. Other options for building credit without an actual credit card is paying off instrumental loans like your car loans, and having a consistent record of rent payments can also help in building your score. Building and maintaining a good credit score takes time and discipline, but it's essential for long-term financial health, so be aware. The next thing is saving strategies. One of the things is saving money is essential for financial security and achieving your long-term goals. And I would, at this point, mention how I, do mine. But I'll start with emergency funds. An emergency fund is your financial safety net for unexpected expenses like medical bills or car repairs. But most importantly, because of the way the economy is right now, and you usually have a boom and a bust economy, having 6 months to a year's worth of expenses saved up is the best thing you can do for yourself. So in a situation where you lose your job or you come across hard times, you have money to fall back on. So 3 to 6 months is typically the goal, but 6 to 12 months is even a better goal. And you can start with a small goal like $1,000 a month, and then you build that up, but always have it. Next, always automate savings. So I have an application, and this is an advert for Stash. Stash is essentially a tool that I use for automated savings. And what I do with Stash is I'm able to set aside a specific amount of money every month or every week, as the case may be, to be placed into a particular fund. And what that does for me is I'm able to diversify my risk. So what I do every month or every Monday is set aside, $40, $50 every week. And that grows. You put that in an investment and that goes. You would see a link to Stash. If you use my link, it will be in the description of this podcast, so that you can take advantage of doing automated savings that would help you. So that's for Stash. Then you also have things like investment options. So things like consider options like high yield savings accounts, certificate of deposits, or U.S. Treasury bonds, or secure low risk growth. The U.S. Treasury bond for secure low risk growth. So you can essentially do your automated savings that puts money in these investments. You also make sure you take a look at the retirement accounts as well, 401k or IRAs. Usually, if you're in a big company, they usually what they do is they match your 401ks that that they usually have. I will discuss 401k in another segment of this episode, so we can discuss more of that. The next thing in terms of saving strategies is cutting costs. So try to limit non-essential purchases like dining out, entertainment, and subscription services. When it comes to subscription services, I'm addicted to them, so I'm working through that myself. But I don't eat out, and I don't have any form of entertainment, so I always eat in. I always cook food, or at least my wife does, and sometimes I do, but I always eat in. And entertainment for me is just a cinema. That's probably once every quarter, because I have the streaming services, so there's no need to go to the cinema all the time. Also find discounts. Take advantage of student discounts, coupons, sales to reduce everyday expenses. Buy second-hand clothes. Consider, second-hand clothing, furniture, and electronics. You don't have to buy them new. And I had mentioned things like goal-based savings. So things, for example, I want to go on vacation. You want to buy a new car. You can essentially set up tools that would give you an idea of how you're saving towards that goal, and then you can track your progress, regularly review your saving goals, and track your progress and adjust your strategies as you need. The next thing in terms of this financial in this financial episode is tax obligations. You have to ensure that you pay your taxes in America. So you need to be able to ensure that you do not overlook this very vital thing. So generally, if you earn income in the US, you need to file a tax return. This includes your wages, salaries, and any other income sources. Your tax obligations depend on your residency status. Typically, if you were on here as a student and you graduated, you probably would have to file as either single, or if you have kids, you will file as head of household. However, this is not a tax. I'm not, don't take it from me. It's not tax advice on this on this podcast. So be aware that you need to consult a CPA, someone that is vested in doing that, to be able to do your taxes properly. But in this episode, I want to just make sure you familiarize yourself with the W-2s, which is your wage and tax statements, 1099, and other forms like that. Tax returns are typically due April 15th each year. Extensions may be available if needed. There are certain deductions you can take. Educational credits. If you're taking courses or training, you might qualify for educational credits such as lifetime learning credits. Some of these are for residents, some you cannot access. Again, talk to a tax person, a CPA. You also have things like standard deductions. Non-residents can generally only claim the standard deductions if they are married to a U.S. citizen or resident. Also, state taxes. In addition to federal taxes, you may need to file state returns. So find out where you live. So in California, you'd have to do federal and a state tax. In a place like Texas, you just do the federal. So be aware that your process. But in all, make sure you consider hiring a tax professional or using tax preparation software designed for international workers. Also utilize resources provided by your employer, university, or local community that offers tax assistance. Understanding and fulfilling your tax obligation is crucial for maintaining legal compliance and financial health. And as well, taxes are very vital for things like green card and citizenship. It's always very vital to keep a very good record of your taxes. In the next segment, which is the 401k that we're getting into, I'm going to discuss the 401k plans. This is the final segment of this episode. And a 401k plan is a very powerful tool for retirement savings. Understanding the difference between the two types, which is traditional and Roth 401k, can help you make informed decisions for your financial future. So, what is traditional 401k? Traditional 401k's contributions are made before they tax you. So if your monthly is $15,000, they will take the money out of the $15,000 and then they apply your tax rate on the $15,000. Contributions are made before taxes, which lowers your taxable income. This can be beneficial if you're currently in a higher tax bracket. Your investments grow tax-free until withdrawal, typically at retirement. So what they do is they don't tax you initially when you put the money in, but the hope is they're going to tax you when you retire, when you start withdrawing it out. Withdrawals are taxed as ordinary income. This can be advantageous if you expect to be in a lower tax bracket in retirement. So let's say, for example, you were being taxed at, say, 30% for an example. So before you took the money out, you put the money in the 401k, you were taxed at 30%, but in retirement, you were taxed at 15% because your earnings are lower. You're getting that tax advantage. The flip side is the Roth 401k. Contributions are made with after-tax dollars. So it's after they've taxed you, so there's no immediate tax benefit. Your investments grow tax-free, and qualified withdrawals in retirement are also tax-free. This plan is ideal if you expect to be in a higher tax bracket in retirement or prefer tax-free income later. One advantage of the 401k is that many employers offer a matching contribution to your 401k. Contribute least enough to get the full match, as it's essentially free money. So you might be contributing $2,000 and then your employer will match $2,000 up to a certain limit is what they typically do. And also understand your employer's vesting schedule to know when you fully own the match funds. Some company would have to wait 6 months before you get the full amount that your employer has been giving you. Some vests immediately. Be aware that there are annual limits. For 2024, you can contribute up to $19,500 or $26,000 if you're 50 and over. To be sure to maximize contributions if possible. So, choosing between Roth and traditional, consider your current and expected future tax brackets, income level, and retirement goals to decide which plans best suits you. Some employers offer the option to split contribution between both plans. By leveraging the benefits of 401k plans, you can build a substantial retirement fund while enjoying tax benefits. So, this wraps up the episode today for financial planning for international workers. I covered budgeting basics, understanding US banking, building credit, saving strategies, tax obligations, and 401k plans. Each of these areas is crucial for managing your finances effectively and securing a prosperous future in the US. Remember, financial planning is a continuous journey. Stay informed, make wise decisions, and don't hesitate to seek professional advice when needed. Thanks for tuning in to Leap with Japa. Until next time, keep striving for financial success and personal growth. Thank you very much. Thank you for tuning into this episode of Leap with Japa. I hope it brought you valuable insights and stories that resonate with your journey. If you have any thoughts to share, questions, or want to send a voice note with your feedback, please visit our website at leapwithjapa.io. You will find a contact from there. I would love to hear from you and feature your voice in a future episode. Don't forget to subscribe to the podcast on your favorite platform, some of which are Apple Podcasts, Spotify, iHeartRadio, or Player FM. Your subscriptions and reviews help us grow and reach more listeners, and I truly appreciate each one of them. Also, check out our merch store on leapwithjapa.io website for some cool t-shirts and hoodies. Perfect for showing your support for the show. Stay tuned for our next episode, where we'll dive even deeper into the experiences and challenges of international education and careers. Until then, keep leaping forward. And thanks again for being part of the Leap with Japa community.